If you're not familiar, Coffeezilla is a creator that likes to expose and talk about scams. He does a lot of research. This is a 13-minute video. Should be interesting.
Today we're talking about a bank promoted by YouTubers that's now become a casino and users can't get their money out.
This video is sponsored by Yotta Savings.
Yotta, Y-O-T-T-A.
Yotta Savings?
The Yotta Savings app, maybe you saw a couple people talk about this.
Yes, I have seen people talk about Yotta recently.
Hey, my name's Daniel. My wife and I, our family has 18,000 in Yotta that we can't get out.
Over $60,000 frozen up in Yotta.
$15,440.06 frozen in Yotta.
$7,270.60 frozen.
$583.
$98,000 frozen in Yotta.
$98,000 frozen in Yotta. Why wouldn't you, if you're going to put that into essentially a digital bank, because that's what Yotta was or is, right? It's a digital bank as far as we know. If you're just going to put it in a bank, that's all you're doing. Why wouldn't you put it into a real bank that you know has like at least a certain level of trust? We won't get into like the whole bank system.
Yotta.
94,000, give or take, frozen.
Another 94.
$699.
God, because people
Yeah,
are dumb.
it's a disaster, and we're going to break down what happened. Let's start with the basics. A few years ago, Yotta Savings advertised itself as a no-lose lottery through
Yotta, play the no-lose lottery.
YouTubers, where you'd get a lottery ticket by saving money rather than spending it. It's called gamified savings, and some took it beyond a sponsorship and bought equity in the company because they liked the idea that
Gamified savings. It's a no-lose lottery.
at much. The most viral example of this was Graham Stephan.
But anyways, they said, hang on, but they said it was what? They said that you earn tickets by saving money. So I'm assuming what they mean by that is, hey, for every bit of money you give us, right, that you save with us. So for every, let's say for every $100 you put into your savings account, your Yotta savings account, you get 100 Yotta bucks. So they're essentially turning your money into some sort of like, digital currency, right?
Who claimed that I bought a bank.
I decided to invest an undisclosed amount, and now I can officially say I am a small owner in Yotta Bank.
Now these videos are deleted, as Yotta has become more than a harmless savings app, and users can't get their money out. But to understand what exactly happened, let's first go back to when they demanded an apology from me back in 2022. They made a brief appearance in a video called The Most Evil Business in the World, and for some reason they didn't like the cameo. They said, quote, "Given these false claims, we would like you to issue a statement in a video clarifying that your claim that Yotta is a scam is false and misleading." Now, I never said that exactly, so I didn't apologize, but I found the next bit a bit more baffling. They tell me, quote, "You could also conduct an interview with Adam Moelis, the co-founder and CEO of Yotta, if you wish," which I found odd. Either way, I decided to today take them up on their offer 2 years later when I checked back in on Yotta and found customers' accounts have been frozen and their website looked more like a casino.
This looks familiar. This looks like stake.com, yeah? The Plinko machine with the things, the basically Minesweeper. If you clear the board, you can, for everything you click, you get a times, like you get your money back. So like right now, if this person could cash out, this person could cash out now and make a little bit of money or whatever. Or they keep going, but if they hit the mine, they lose their bet.
Lottery. On their app, Yotta now offers roulette, dice, blackjack that you can lose money on. Now, honestly, I was shocked by this. This is the same company that's saying play the no-lose lottery, regular lotteries are scams, they prey on innocent people. Now they're offering gambling. So, of course, I reached out to the CEO. And he told me Yotta is not actually gambling. Quote, "We decided to pivot the business
Wait a minute.
sweepstakes."
Yotta is not actually gambling. Can we back up here? Hang on. Yotta is not actually gambling. Risk low. Your bet 1,000. I'm assuming Yotta coin. Spin. Your bet. Your bet. Risk. Sounds like gambling to me.
Gambling. Quote, "We decided to pivot the business into sweepstakes earlier this year. Sweepstakes is not gambling. We worked extensively with lawyers in the space to build out the program." Now, I don't know which lawyer told Yotta blackjack isn't gambling, but it's time to get your money back. All Yotta is really doing is running a loophole. The CEO says you can't actually buy Yotta Cash, but this is a very sneaky claim because one way to get Yotta Cash is by purchasing tokens on the app. These tokens are pointless, except that they come
Yep,
with
there it
free
is.
Yada Cash.
That looks, yeah, here you go. For $13, I'm assuming that's what this is. Or for $10, because it's marked down, guys. Oh wait, hang on. There you go. For $10. It was 13, but we're saving you money. For $10, you get 250,000 Yada tokens and $13 of free Yada Cash, whatever that means. It's like a mobile gaming transaction.
Spend $10, get 13 free Yada Cash to gamble with. The more you spend, the more free Yada Cash you get. It's really just a stupid loophole to claim that this is all a sweepstakes and that blackjack, dice, and roulette are somehow not gambling, which is of course ridiculous. But most interesting, I think, is the admission from the Yada CEO that, quote, yes, this is at odds with the initial mission to encourage savings.
Yeah,
the savings-based
obviously.
business model wasn't working, so we decided to pivot. But pivot to what? To the exact thing your system was designed to fight stupid lotteries that waste people's money, and you pivot to just getting people hooked on actual gambling? Is that it? It's like me starting a methadone clinic only to pivot to selling heroin because that's where the real money is.
It's a good analogy. I'm going to run a meth clinic and then pivot to heroin because that's where the money's at. Okay.
It's utterly ridiculous,
The
and
savings
I
space
told
wasn't
their
working
CEO as
for
much.
these savings
and to my
accounts.
surprise,
Well, I guarantee you what this is, right? What they were doing is they were taking everybody's money. So the 90,000, the 94,000, the $583, they were taking all that money and made investments that didn't pay off. They took the money and made shit investments. Exactly. They made investments that they lost money on, and they said, shit, we don't have money to pay any of these people back if they were to pull their money out. We got to make money. So they pivoted to the only way they knew how to make money, which was an online casino.
he responded asking me for help. Quote, you can make your own moral judgment
Shut
of
up,
whatever
GME.
you want. That's fine. But the issue that matters is that our customers haven't been able to access their funds for nearly 3 weeks. I think you can help. And honestly, he's right. I do want to help Yada's customers not getting their money, but I can't ignore that Yada is a savings app that became a casino, the exact thing they were fighting, and that's disgusting. 2, YouTubers brought people into a financial product that is now broken, and rather than address it, most of them have gone radio silent. Some are deleting their original videos. Now, of course, most of these YouTubers
I think that's the only way I would
had
handle
no
that, though.
idea Yada was going to pivot from savings to gambling, or that users' accounts would be
Because I would say for those that, you know, they had it as a sponsorship, let's say like this stream or this video or this whatever is sponsored by Yada, you know, I don't think you can hold them accountable for whatever the company does in the future, because at the time they were a bank when you, assuming, right, when they were sponsored by them or took the sponsorship, they were just a bank, right? Obviously poorly run, but they were a bank. I guess the difference would be the guy that actually bought the shares of the company to like partially own the company. That's a little bit different because he's actually invested. He should know what's going on behind the scenes, right? But the people that just take the sponsorship to make some money on their extra money on their video, you can't, I don't know. I don't feel like I could hold them accountable for something that happens later down the line, but you know, I'm not in that position, right? I don't get sponsorships to do videos.
frozen. But this is all the more reason that YouTubers should not be getting in the business of promoting financial products, especially finance YouTubers.
That's what you said.
I've spoken
D.
to a lot of these people. They all tell me the same thing. Oh, I feel so bad. It's not my fault. I had no idea. And that's all fine. But when people bring up your name as an explicit reason they got into this savings account, it starts to ring a lot more hollow.
So my brother actually told me about it. I'm pretty sure he found it through the Graham video.
That would have been Graham stuff.
So I think they're all about to ramble off this Graham Stephan guy. But anyways, that girl, first girl. So I heard it through my brother who heard it from Graham Stephan, who's a YouTube guy. Like, make your own decisions. Don't even listen to your brother.
Stephen Graham video.
Graham Stephan's.
Graham Stephan video.
Graham Stephan came out with a video.
Graham Stephan, Andre Jek, guys that I like as, financial YouTubers.
Yeah, this is the reason I hold financial YouTubers to a higher standard. Overwhelmingly, I find them to be more influential. Although I have to say again, I don't hold them or anyone else personally responsible. I hold them all irresponsible for promoting financial products. This is not like promoting Dollar Shave Club, where people get a product and that's it. If the company goes bust, it doesn't matter. Financial products are different. You are asking people to put their money somewhere. If in 5 years that goes bust, people are going to remember you advertised it to them. Yep. And if you're uncomfortable with that, if you think your bank might blow up in 5 years, don't promote it. Shill a VPN and have a nice day. But if you insist on telling people the best place to put their money, you better not be upset when they listen. By the way, as I was editing this video, someone released a podcast sponsored by, you guessed it, Yada.
This episode is brought to you by Yada.
This is despite the fact that currently withdrawals are frozen. And now,
see, so that's just not doing your homework.
Pivot myself and talk about frozen funds, which is a
Raid
huge problem
Shadowlands
that
or
goes
bust,
beyond
100%.
Yada and influencers. Since early May, many fintechs, including Yada and Juno and many others, have had all their user funds frozen. Up to 200,000 accounts are affected. And it's for many reasons that surprise
I never
users.
installed it.
See, most people saw these companies like Yada as
that's the way to do it.
Remember, Graham Stephan even said, I bought a bank.
I just bought a bank.
But this isn't quite accurate. These are fintech companies, not banks. They're not holding anyone's money. They're not FDIC insured.
There you go. Not
they
FDIC.
have a bank they work with that is FDIC insured, and that's where your money is sent to. In this case, the main bank is called Evolve. Normally, this distinction doesn't matter, but when things go wrong, it makes all the difference. So does the distinction that fintech companies like Yada don't work directly with Evolve. They have a middleman called Synapse. Now, I want you to think of Synapse as an adapter from old tech to new tech. It's kind of like your iPhone dongle. Remember that? Connecting a lightning cable to a headphone jack. That's Synapse, connecting banks to fintech. And I know I'm not exactly an expert on this, so I brought in someone who is to explain what happened, because the next part gets kind of confusing.
My name is Jason Mikula. I spent about over a decade in fintech and banking, including at Goldman Sachs. So I have some experience in the sector.
What actually has gone wrong here?
So the sort of
I don't trust this guy.
Cause was on Saturday, May 11th. Synapse, which is this technology middleware provider or banking as a service provider, revoked Evolve Bank's access to what in the court filings is being referred to as the dashboard, which is basically Synapse's IT systems, including actual ledger information. And so when Synapse revoked access to that information on Saturday, May 11th, Evolve functionally froze all of those programs by ceasing to process payments. So Evolve's decision to respond to Synapse revoking that access is what led to users being unable to access their funds beginning on May 11th and continuing through to the present.
People are saying, oh, it's FDIC insured. Why isn't that working?
Yeah, so it is. End users' confusion is entirely understandable, right? One of the great successes of the American banking sector and American banking regulation is that you, generally speaking, don't have to worry about whether or not your money is safe. However, that in this case, and it's not the only case, has engendered some confusion for end users who see FDIC insured and read that as, this is safe. My money's safe. I'm going to get my money back. Now, what is FDIC insurance and what does it do?
Is this guy losing his mind?
It protects depositors, end users, in the event that a bank fails. A bank has not failed here. And so there is no direct role for the FDIC to step in. If Evolve had failed, the FDIC would step in, seize the bank, and sort of figure out the next steps. That's obviously not what's unfolding here.
Right. So if you have money frozen.
Oh, God. Why do I think this was a good idea? So I think I get it. Well, so that's the thing, right? Is I think that they still consider themselves a bank because people can store their money there. It's just that, we have this these front end apps that allow you to gamble if you so choose and maybe make more money to put into your savings account. So maybe they are classified as a bank still. They just added features so it's gamified savings, right? They gamified savings. It's wild. No shot they pass a state by state game. Correct. It is. It's illegal in a lot of states.
It is FDIC insured from a bank failure. But in this case, banks haven't failed. It's the in-between layer that has, meaning your funds are stuck until this is fixed. But it's not exactly clear when that will be because Evolve and Synapse can't agree on who owes what. The founder of Synapse says it's all in Evolve's control.
That's true,
We are
I
doing
guess.
everything we can
I
to
wasn't
release
thinking about
funds.
that.
Meanwhile, Evolve says Synapse's records are wrong. Quote, recent ledgers and data do not align with the actual movement of funds in and out of Evolve. Basically, someone is lying, or even worse, doesn't know what the truth is, and this isn't a disagreement about a few pennies. It's $150 million being argued about. But according to new reporting from The Information, such discrepancies were known about for at least 2 years before the revoked dashboard and Synapse's bankruptcy, meaning this could have been avoided, but it wasn't, leaving a bankruptcy trustee to pick up the pieces and hundreds of thousands of accounts frozen. And we don't know who owes who what or when. We'll find out. But all I have to say is, who cares? People need their money back. They were told these fintech programs were safe, now they're stuck. Look, after talking to the people affected, I get it. Banking is complicated, especially as I spoke to Jason, that became super clear.
But still, if you're going to put your money into something that you think is essentially a bank, why trust some random app on your phone or computer, or random website that has no physical location that you can go to pull money out? I don't understand that, especially when you're talking $90,000, $94,000, and you're going to put it on some random website that your brother said was going to be good because some financial YouTuber said it was good. Like, what are we doing here?
But historically, this hasn't stopped us from helping the elite when complex banking problems come up. Remember Silicon Valley Bank?
Yep.
Look, I know it's a different story, but back then we moved heaven and earth to make sure startup founders got their money back beyond the FDIC insurance limit. Out of concern for the rich and powerful, we bent the rules. And all I'm saying is, I get that this is also not a traditional FDIC insurance case, but dare I say we give regular Americans the same level of urgency and empathy we gave to Silicon Valley founders when we decided to bend
because
the
there's more
rules for
money in
them.
Silicon Valley.
It's
That's
been
why.
3 weeks with no end in sight, and these people have mortgages to pay,
More money in that bank.
taxes, bills, and
That's why.
quibbling about the middleman or the bank whose fault it is to miss the point. Trust me, there's plenty of blame to go around in this story. But for the immediate future, let's focus on getting these people their money back before they're punished for something that isn't their fault. Because time is of the essence. Even if these people eventually get their money back, the win matters just as much, as people with frozen accounts told me.
I mean, it means everything to me. I wasn't able to pay rent for this month. I wasn't able to pay my bills.
I quit my job, quit my career to go into business for my family, and my savings is my safety net for doing that, for making such a crazy decision.
Oh,
So it means
God. Oh my God. This guy. Is this guy serious? So he quits his job to go chase the entrepreneurial dream. Go. Good for him. Like, hats off. But decides to put his money instead of a physical bank location like a credit union or something that you know is going to be pretty good. It's going to be pretty safe. A physical freaking bank. There's so many chains out there that are huge that where your money is going to be safe. You put almost $100,000 of your safety net into some random God damn it. Oh, it hurts my head.
luck.
We really have no safety net. I mean, even if that money's not gone, it's gone for us for now.
My wife and I have been saving for our first home. If this takes months, years to drag out, it's going to delay our home.
I've been saving essentially for 3 to 4 years, and was saving up for a wedding.
Oh, this guy.
To buy a home. And, you know, as soon as this stuff happened, that was actually the first week that I needed to pay off the deposits for the wedding. So, it hurt me quite a lot.
Santec, CEO of Synapse, did not respond. Adam Mola, CEO of Yada, responded, "All regulators seem to be pointing fingers at each other. They are saying there hasn't been a bank failure, so it's not their problem. I'm hopeful your coverage can help in that regard." So I like how this guy is reflecting and saying that he must know that Coffeezilla is a guy that would have come after them to like try to make them look bad or expose them as a scam. So I think that's what he's doing here. I think he's kind of gaslighting. I think he's trying to gaslight Coffeezilla, to be honest, because Coffeezilla is well known. He's got almost 4 million subs. All right, that's this video. I like his content a lot. Nothing could convince me to put my money into anything outside of established sources. I wouldn't even set up a crypto wallet because that shit isn't real. All crypto is a scam. I don't touch crypto. I refuse. I'll stay broke if that's what it takes. Well, that was an interesting video.